federal government just announced that they'll now let you put as little as 8% down on homes up to $1.5 million, which of course is less than half the 20% required now.
That's crazy.
That's right, this is a massive change, so I'm going to break it down quick for you. Currently, the way mortgages work now is you have to put a minimum of 5% down on the first $500,000 of sale price and 10% down on the balance up to $1 million. If you buy over $1 million, you have to put down 20% down, period. Now this is where things get interesting. The only reason the banks will do these riskier loans under $1 million with a lower down payment is because us, the taxpayers, have guaranteed these loans to the bank. That's right. Whether you're buying or selling or you own or you rent, we are the ones funding the default insurance with our tax dollars, so the banks can't lose. The positive trade-off, of course, is that this allows buyers that have high incomes but maybe don't have the high down payment to get into the market. With this week's announcement, the government has increased the maximum purchase price for these high ratio or subprime mortgages from $1 million to $1.5 million, allowing not only the lower down payment, but also the full protection for the banks against default by us, the taxpayer. Of course, this is great news for buyers looking to get into the market, as this will save you over 50% of your normal down payment on a home at $1.5 million. Normally, you'd have to put down $300,000 for your down payment, but now you'd only have to put down $125,000. So this rule could shave years off your home ownership trajectory and get you in there faster. Because let's face it, how long would it take to save an extra $175,000? Now this could be really great, but let me remind you that today there are still tons of areas that are 20 to 30% under from the peak of spring 2022, and there is already story after story of people losing everything because they were forced to sell with bad timing just 2 years after they purchased, which is right now, because they only had 20% equity in their home. Now just imagine if you only had 8% equity, how much you'd have under the current program. Talk about being a slave to your mortgage. Now just imagine you're being forced to underwrite those riskier loans or guarantee them with your tax dollars so the banks can't lose anything, but imagine that you're 10% underwater on your home equity. Now wouldn't that be ironic? I'll also just mention that the government is now offering 30-year amortizations as opposed to the current 25 years for first-time homebuyers or for anybody on brand new builds. So this will be great for first-time homebuyers and even more so, of course, for the banks. Anyway, I'd love to hear your thoughts in the comments below. Is this an overall good policy when you factor in the huge benefit to some buyers who are now going to be able to get in the market who weren't able to before? Or is this another example of the tax